Hi, this is Daniel. You're watching Unrivaled Investing. When Michael Burry, who's arguably one of the greatest investors around, when he talks, I want to listen, especially when he says, hey, folks, there's a story that's critically important, not getting enough attention. He's calling out Jordan Schneider, a journalist, saying the U.S. government's new export controls are wreaking havoc on China's chip industry, calling out the sanctions from October 7th from the Bureau of Industry and Security, which is within the U.S. Department of Commerce, that's targeting the People's Republic of China's their ability to both purchase and manufacture certain high-end chips used in military applications and build on prior policies. You're looking at potentially very tough sanctions on China, where the U.S. is saying, hey, if you are a U.S. person, so you have U.S. citizenship or U.S. green card, and you're working in the Chinese semiconductor space, you are going to have to pick between the two. You can either have U.S. citizenship or you can work in the Chinese semiconductor space. Because if you're interested in further the progress of China's semiconductor space, we're effectively going to renounce your citizenship. You're going to lose your U.S. citizenship. And that's a big deal. A lot of people prefer the freedoms that you get with being part of the U.S. versus the opportunity that you might get with a growing sector in China. Now, clearly, that's what China wanted, a very fast-growing, independent semiconductor space. For years, you could see that they say, hey, we want to become a leader in manufacturing the cutting edge. Partly that's because semiconductors are in everything. They're in your phones, they're in your cars, you're in your servers. They are going to lead. The best chips will lead the latest advancements in technology. And so this is so important that China said, hey, it is our goal. So that way China becomes the leader in manufacturing it. But here it is. This ban, you see the headlines. This ban on U.S. talent at China chip firms thwarts Xi Jinping's key ambition, to become a leader in semiconductor manufacturing. You see many different U.S. executive persons, many U.S. persons working at Chinese firms in top roles that are facing this choice, and so far the results suggest that they are leaving. They're choosing to resign. And honestly, this has been the playbook that you've seen from China for some time, like Huawei, looking to catch up, their technology with their smartphones, to say, hey, can we catch up to the iPhone, by hiring a former Apple creative director, Abigail Brody, as its chief designer in 2015. And you've seen this pattern over and over again, hire folks that have already built it out, let's say in the US, to sort of leapfrog and try to get the semiconductor space to become a cutting edge position. So Jordan Schneider saying, hey, every American executive in engineering working in China's semiconductor manufacturing industry resigned yesterday, paralyzing Chinese manufacturing overnight. One round of sanctions from Biden did more damage than all 4 years of performative sanctioning under Trump. He talks about how this is what annihilation looks like. China's semiconductor manufacturing industry was reduced to zero overnight, complete collapse, no chance of survival. That seems like hyperbole. The question is, what happens from here if he's even half right? If this dealt a significant blow to China's semiconductor sector, what does this do to the world sort of dynamics? Well, first, if you're looking to take charge of your investment journey, consider unrivaledinvesting.com for compelling investment ideas, real-time portfolio updates, and our exclusive Discord server available for annual subscribers. And full disclosure, this is not financial advice. So not surprisingly, you are seeing pressure and potential risk that China is going to accelerate their efforts to acquire, take over, invade Taiwan. And you see this from Secretary of State Blinken saying, yeah, Beijing is speeding up their plans for unifications. Now, China already says, hey, it's a one China policy. Taiwan's part of us. And the reason why this is so concerning is because the leading semiconductor manufacturer, Taiwan Semiconductor Manufacturer, that makes the physical wafers that effectively gets produced, and used around the world for the leading tech, that's in Taiwan. So China, if they say, hey, if you're going to stick it to us and we can't manufacture it in effectively, mainland China, what if we just say, hey, we're going to leapfrog and acquire Taiwan and aggressively move, effectively seeing a hot war? Could you see retaliation? And look, Taiwan Semiconductor, they are manufacturing, they're generating tens of billions of dollars in revenue. They're growing very quickly, nearly 50% growth in their third quarter. And they talk about, well, what's driving the growth? It's their leading edge technology, saying strong demand from our industry leading 5 nanometer technologies, talking about how advanced technologies defined as 7 nanometers and more advanced. So the 5 nanometer combined is 54% of their total wafer revenue. What you look at with Intel is they are nowhere near this, because a lot of folks are saying, well, wait a second, the US has their CHIPS Act. The US is looking to catch up. This way, you're going to be able to sort of level the field. This is going to take years and years and years, folks. Like, Intel is so far behind, and you can see that with the results where Intel's foundry services revenue is only $122 million. This pales in comparison to, let's say, some of their other core product groups like Client Computing Group, which is effectively personal computers, workstations, data centers, and AI Group with servers. Both of those segments drive the majority of their business, also down significantly. Their foundry services, which arguably would aim to compete with Taiwan Semiconductor, that is immaterial and not growing very quickly. And they are making huge investments, tens of billions of dollars over the next few years, just to catch up, to just try to catch up to Taiwan Semiconductor. So this is arguably such a huge choke point for the global economy, because whoever has those leading chips can ultimately determine how certain sectors play out, some certain leading sectors. And I look at this and how does this impact the markets? I personally view this risk as not priced in. You look at the S&P 500 trading around 18 times trailing earnings. If you have a lot of industries that all of a sudden can't get access to semiconductor chips, like, we know what that happens. I mean, that drives dramatic supply crunches where people say, hey, we're not able to produce our phones. We're not able to produce critical equipment. It might even be dishwashers. It might be, anything where it's like, hey, this has huge ramifications on the whole supply chain. I also think just this movie is concerning. It's sort of like repeating what we've seen before. And if you study history, the wonderful book on the history of oil called The Prize, and it talks about, well, what ultimately pushed Japan into World War II was when effectively the U.S. provided enough sanctions that limited Japan's access to oil. And it argues semiconductors in many ways are like today's oil, where you need it in order to drive your economy forward, especially the leading industries. And so this pressure that the U.S. is applying on China could create much greater risk. And that's what you're seeing with Secretary Blinken sort of say, hey, Beijing is accelerating their timeline to invade Taiwan. So I view this as a red flag, saying, hey, you know what? Given these risks, is this being priced in the market? I don't think so. When you see Michael Burry saying, hey, I don't think folks are paying enough attention to this, that's sort of thinking, well, what's the ramifications of this? What happens if China retaliates in some way? Now, maybe they just do a tit for tat with some sort of trade war, sort of say, hey, maybe our rare earth minerals, that are critical for magnets, we're not going to give you access for that. So this is sort of the question that sort of spirals. When you look at so much manufacturing that's been outsourced to China and you're trying to bring that back, does this mean you're facing elevated inflation for years to come? In which case, if you have higher inflation because you're saying, hey, we're going to bring that manufacturing back onshore or friendshore, if you're US, you're going to say, hey, we're going to manufacture maybe in Mexico. Does that mean it's going to be impossible to get to that 2% inflation target because you're effectively going to have 4-6% inflation for the next decade? In which case, if you have 4 to 6% inflation for the next decade, could you be looking at much, much lower valuations from here? So I look at this very cautious, data point that I think, and it personally makes me say, hey, I want better bargains when I'm looking at the investment horizon. If you enjoyed this video calling out sort of the latest developments from the U.S. China semiconductor, conflict or trade escalation, please make a point of hitting that thumbs up, hit that subscribe button, and thanks so much for watching Unrivaled Investing.